You're not imagining things. After the inflation crisis of the early 2020s. In 2020, trillions were printed globally to fight the pandemic. Inflation spiked, interest rates rose, prices soared. So why haven't central banks stopped printing? Because the modern economy depends on it. In this video, we explain why the money printer never really stopped and what it means for our future. Let's be clear. Governments aren't physically printing bills. Most of the money is digital, created by central banks. This process is called quantitative easing. Here's how it works. The central bank creates digital money, then uses it to buy government bonds or other financial assets. This pumps money into the economy and keeps interest rates low. The idea is simple: make borrowing easier, encourage spending, keep the economy running, especially in a crisis. Quantitative easing started as a short-term emergency tool during the 2008 financial crisis, but it worked, so they kept using it even when the emergency ended. By 2020, during COVID, it wasn't just used, it was supercharged. The US printed over $4 trillion in less than 2 years. The EU, Japan, and the UK expanded their central bank's balance sheet to historic highs. Emergency situations became everyday policy. What began as a fire extinguisher became the fuel. Yes, it caused inflation eventually. At first, most of the new money sat in asset markets like stocks, bonds, and real estate. That inflated prices for investors but not for everyday goods. Then during COVID, money was sent directly to households and businesses through simulation checks, business loans, and rent relief. That money flowed into the real economy. Demand outpaced supply, prices surged. Inflation wasn't just high, it was global, and yet the money printer didn't stop. Here's the uncomfortable truth. Governments were addicted to low interest rates because they owe money. A lot of it. If central banks stop buying bonds, interest rates go up. That makes government's debt more expensive. So central banks keep printing money to buy government debts to keep interest rates low. It's not politics, it's maths. Without cheap borrowing, the system stalls. Let's look at 3 examples. The United States ended QE in 2022, but resumed it in 2024 during a soft recession. Markets panicked, bond yields surged, growth slowed. Japan has been printing money for decades, which caused low inflation, low growth, and now they own half their own government bonds. Argentina, on the other hand, printed too much, too fast. This resulted in hyperinflation, currency collapse, and an IMF bailout. Printing money can work, but only if people still believe in the system. So what happens if money printers never stop? Currencies lose value globally. Asset bubbles form in stock and housing. Wealth gaps widen. Trust in the system erodes. The danger isn't just inflation. It's when people stop believing their money holds value. You can't control central banks, but you can protect yourself. Don't hold too much cash long term. Invest in inflation-resistant assets like stocks, real estate, and gold. Stay informed, diversify. The money printer hasn't stopped because it can't. The system we'll live in now relies on ever-expanding debt and liquidity. But with knowledge, you can play the game more intelligently than most.